Ciao tutti, buongiorno, congratulations if you took the two trades that I gave you yesterday. And we're of course going to look at the charts, but I also have some other interesting data for you. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram, both those links you'll find in the description. Without further ado, let's start diving in. This is Bitcoin on the 1 hour, and today I just want to zoom in a little bit locally. And as you can see, we had a short from yesterday, and that is also a short that we talked about, where I said if you are short from the point of control, take some profit, but be ready to re-enter again if we are coming back up after or during New York Open, to then play it again to the downside. That is exactly what happened. So congratulations if you took the trade. And then second, we had a long from the golden pocket. I did not take this trade because I was already asleep. A little bit of a move up past the view up. That is the white line in my screen. So make sure that you are taking some profit. But I think actually that we're going to roll over one more time. So there were two trades given for you, and I really hope that you took them, at least that you took this trade here from the point of control. Very nice backtest, and also happy that it happened during the New York hours. So I'm going to take this trade off. If we're now going up again, probably will not short it at all, because then I think actually we're going to reclaim the point of control, and we are going to close above all of these highs. So therefore it's not really a valid short for me anymore. I am actually getting a little bit more bullish, and that's for multiple reasons. I think we have been going down now for long enough. We do see a little bit of a few bounces, but also some seller exhaustion. You can already spot that a little bit in the chart. How do you spot that? Well, that is the difference between one low to another low. You can see there's only 1.5%, and from here to here it's only 0.6, 0.7%. If the bears are really that strong, and there's very aggressive selling, then price should have dipped much lower on these attempts. I mean, it's nice that you have these moves, but actually you want to see much more aggressive selling to the downside, much bigger differences between those lows. So really 2, 3, 4% between every low, and also the other way around to every high if you are more bullish. So therefore I'm thinking we might be running on our last legs. Doesn't mean that this is the low, but I think we are close to a low and before we are going higher. So I'm keeping this long trade on. I'm not in a long trade right now. So if we are going lower, and we for one more time taking out these lows right here, then I will definitely be very much interested to take the trade. You also see here this yellow line that is at 64,500. That is the low from here. I kept that in. We did not take that out yesterday, so actually would still be very interested in taking that long if we are taking that liquidity, taking liquidity from yesterday, and then to play it to the long side. Not the absolute most preferred long, because I still have the value area low just underneath, but this could be a very nice trade. If I just look at the 1 hour market Cipher B, money flow looks actually very bad. The view up as well, and the RSIs are pointing lower. So if I just only would have seen this right here, I would say, okay, we are in for a pretty big dump. But since price is just moving relatively slow, I think it will not be that bad. Yeah, therefore I would actually say maybe we are not getting a very big move off this level. So it will be then a scalp. I will definitely try to take profit after 0.5 or 1%. The reason why I'm saying that is because I'm actually much more interested in the low underneath. That is 62,000 to, let's say, 62,500. Or actually put the stop loss a little bit lower. So let's say 61 to 62,500, and that is the much more bigger golden pocket that we have from the absolute low that we created to the absolute high that we have right here. And so those are the two longs that I'm interested in right now. I also kept the view up in, because since we have such a local price action right now, we also actually need to look at very much local trades. So you know my two longs. If you're not in a short, something that I might be looking out for is if we during New York Open getting a little bit of a move and then a back test here to that VWAP. That would, for me, that still be a nice short trigger to take a scalp. I would like to see something like a trigger wave here then on the top. This cannot be too bullish and also not the money flow rolling up. If we see that, if we see the money flow curving back up, I will not take the trade. But if I see a nice rejection, then I will definitely try to take that trade. Also something that we sometimes do during New York Open is we are a little bit above and then we're losing it again, and that is then my entry trigger to get in, and I put my stop loss above these highs. So that's very important. Once we lose that level again, if I see a reclaim on a 5-minute or 15-minute, I'm not touching it. I really want to see then a loss again and then to play it to the downside. So that is usually how I do it, and it's actually pretty efficient. If we would reclaim the VWAP, then actually I think we can go to much higher levels. I would do it almost exactly the same, but then reversed, a reclaim, a back test, and then to go higher. But really wait for your reclaim for your 5 or 15-minute candle close and for your backtest. That is very important. And then actually it would also be nice if we can right away start liquidating some shorts, because that is then the fuel to go higher. Not super sustainable, because you actually want to see new longs opening and not so much shorts closing out, but it could be a nice move to the upside. So definitely check out then the CVD for then. Yes, I also said that the traditional markets are just going higher and higher, and I thought, well, it would actually be nice to show it. This is the Nasdaq on the daily. Yesterday we had a very big move to the upside. As you can see, from 2024 on, that is approximately here, the Nasdaq is marching higher and higher and higher, plus 20%. If we're then looking at the S&P 500, almost the exact same story, slowly marching higher, 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 16%. And that is against the average of approximately 10% a year for the S&P 500. Last year we also already had a outperformance. So if you're thinking that crypto is boring and we're just going sideways, you can always trade this. You would say, well, 60% is not a whole lot. This trade differently. This is based on ticks and points, so it's not based on percentages like you see with crypto. So it works very differently on the future market. But I just want to show you that crypto and the traditional stock markets right now are very much disconnected. There is not a whole lot that moves now in sync. So if we see the stock market going up, like yesterday, it was a very big move, we see almost no action on crypto. Something that I also wanted to show you, and that is actually something that I just posted, is that we are moving in sideways range for 3 months now, and we're right now in the middle. Yet there are a lot of pencilnecs on the internet that believe that this is the end of the world, and that's also one of the reasons that I'm slowly starting to feel bullish. And also just posted very clearly an image that you can see we're right at the center, also what I told you already yesterday, but yet everyone is thinking, oh my god, this is the end. We even going to yearly open. Unbelievable pencil neck based on nothing. So yeah, if you need to believe your gurus, then this is the end and we're going much lower. I just take it for this. It is a range. One thing that I do keep an eye on is the inflow on the Bitcoin ETF, or better yet in this case the outflow. We have seen a very strong inflow here, 886, then 488, 270. So quite a strong total inflow. But now the last few days we see a little bit of an outflow, 226, 189, 145. So I'm not concerned, but I do keep an eye on the total outflow. If this continues for the month of June, then I think it can get pretty bloody for Bitcoin, but we're far off from that. I mean, we need still a lot of these kind of red days just to undo these two very strong days here where you have that plus 800 and here almost 500. So just keep an eye on that. But like I said, if the bleeding continues, the outflow continues, then I think it will have a bigger effect. But if else, this is just a range. We're trading it again, as I always say, from level to level, from trade to trade, so you don't have to panic. You don't suddenly have to rush into a trade or to exit or to build up large positions. Just take it for what it is. And yeah, maybe you think, hey, yesterday I caught the bottom, that was it, we are going higher. For me it was exactly the golden pocket, and then you can see that within 24 hours later you might get stopped out again because we're just coming down one more time. So don't get too greedy and don't be a fool by saying I know exactly what's going to happen. You don't know what's going to happen, so just take what the market is giving you. With that being said, we're going to end it here. Be careful with your trading and with your positions, and of course if something very interesting is happening, I will update you. If I take any trades, I will also update you on Twitter. Thank you guys so much. See you tomorrow again, and of course first alert is already going off, and of course I will really appreciate it if you would like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. See you guys very soon again in the next one. Bye bye.